Welcome to the Multifamily Investor Nation podcast, sponsored by CoStar. With us today right now is Anthony Scandariato. And Anthony, welcome to the podcast.
And Dan, thanks for having me. Much appreciated.
Yeah, well, looking forward to diving into this asset that you acquired. It's called Millstreet Manor. It's 51 units out of Newton, New Jersey, acquired in December 2019. Your group, Red Knight Properties. Tell us a little bit about your group. Tell us a little about yourself before we kind of dive into this asset specifically.
Sure, no, absolutely. So my group has a great introduction. So group's called Red Knight Properties, and we're a value-add mixed-use and multifamily operator based out of northern New Jersey. Focusing on workforce housing, Class B and C garden-style apartments. And by mixed-use, I mean, a few apartments above and some ground-level retail in both suburban and infill locations. Right now, only in northern New Jersey. I'm looking at something in eastern Pennsylvania. But we have about 200 units, just got hopefully under contract another couple more. And we've been in business for only a year. I worked for another real estate sponsor on more the office side, more on the institutional multi-tenant, investment grade side. And we bought, office buildings up and down the East Coast from anywhere from New Jersey all the way down to Florida. So had a great experience there. And then I ended up starting Red Knight on a part-time basis while I was working and went full-time in January.
Well, let's not delay here. Let's dive right into this deal, Anthony, and tell us first, how did you actually find and source this deal?
Sure. So through my network, basically through actually one of the larger brokerage houses, CBRE, but it was actually shopped about a year ago prior to us acquiring it, and the market there was very different at the time. And the deal also wasn't marketed very well, not a knock on the brokerage, but they had some other big portfolios they were working on. So it just kind of lost sight, and I always had an interest in the market in the area. And I followed up with the broker, several months later after, from what I believed, the listing was dropped, and was able to pick it up at, a discount. And, the market has changed since then as well. So we closed on that deal on December 30th, believe it or not, of 2019.
Kind of rounded out the year with that final acquisition there of the 51 units. Now,
Yep.
So when it was being shopped a year prior, did you actually bid on it at that time and kind of submit an offer on it, or were you kind of on the sidelines still?
I was still trying to figure out if I wanted to pursue Red Knight in a larger, capacity via syndications. I was just buying deals with my partner in a joint venture. So I did make an offer, but it was more of a low ball and wasn't very serious about it. But then as I started, developing Red Knight more and more, it made more sense to really underwrite it and really understand the market and see what our max offer could be. And, fortunately it was accepted, and fortunately the deal has been performing extremely well and much better than we initially thought. So.
And when you first were acquiring these properties, how did you kind of build your credibility to the sellers before you really had kind of that track record in place?
Yeah. So we own, my partner and I bought 70 units prior to, this is spread across different properties, but that certainly helped. So we had that on our resume. And then, in terms of the, relationship with the broker, I developed that actually a year prior to, getting this deal under contract. And, he's actually from my hometown, and he kind of talked that up a little bit. So it was more of just developing the relationships even further with, the brokers. And as you know, it's very important to be on everybody's good list. Basically all the deals that we closed, we said what we were going to do, and we closed them, even if they were a little bit smaller. And this was just kind of the next step up in our business. So it wasn't that much of a gap from what we were originally buying.
How many other people were you competing with on this property?
Well, it got pretty competitive, as we were negotiating. Maybe it was all BS, but I actually have a feeling it got pretty competitive. They circled it back out to a few people, and I could see why now. So I don't know, maybe 3 or 4 or so.
And in how many rounds of offers did you end up going through on this one?
There's a lot because he kept asking for more, and we were like, I was looking at my partner, and I'm not one to get into a bidding war or anything, but we had our max price that we were willing to pay, and we still didn't reach that area. So, even if we had to go there, we didn't want to, but we had to go there. We could have still made it work, and we're really glad we did.
Yeah, that's good. Well, at what point during this process did you actually end up touring the property? Was it before you submitted your first LOI, or was it kind of after a couple of them into the offers, or at what point did you do that?
So I also live in New Jersey, so fortunately we're local to our market. It's easy for me to drive a half hour and see the property. So I've toured it before, really getting serious about it. And then obviously we put the revised offer in. I don't think we toured it again until we got the offer accepted, and we actually toured every single unit. So I'd recommend doing that if you can. Most sellers won't let you do that, but we were familiar with the market more, and we were comfortable with it. But we did tour it once before, and then when we got more serious, we had to take two or three more trips up there and tour.
Did you have to put up any hard money day one?
Nah, it wasn't that type of deal.
Okay.
Soft deposit, with the standard, period. Actually, it was a little bit longer because the seller wasn't in a rush to sell. He was working on a 1031 exchange anyway, so he wanted the time. It was actually a 45-day due diligence period, and then it was a 30-day close after that with extension options. So it was pretty favorable to an operator. Not that we needed all that time, but it was good to have that, just to have that peace of mind as we go out and fundraise. And us never doing this before, we didn't realize how quickly or how long it would take. So it was good to have that flexibility.
Sure. How long, or not how long, but what kind of issues came up during the due diligence process now, kind of moving forward a little bit?
I mean, being my background as being in the industry, we kind of underwrote what we thought was going to happen on a capital standpoint. How we knew how old the roofs were. We knew how old the mechanical, all the heating systems were, the boilers were. Honestly, there really wasn't many surprises. We were surprised that we had, I think, 4 or 5 Section 8 tenants in the building, which we were okay with, and we were comfortable with, and working through some issues with that right now. But we overcame one of them. We just got to get through the rest. So.
Sure. What did you do as far as financing on this asset?
So we're looking back, maybe I wish I did a little bit differently, but we took a bridge loan. Basically it was like an 80% loan to cost situation. And what we ended up doing was we financed the construction costs because the upside in the rents are 30%, and actually they're north of 30% now. And we just figured it would make sense to finance. It needed at least 5,000 to 6,000 units. So you're talking about 300,000 or so in improvements that we just rolled into the loan, and we're going to be actually looking to refinance at the rate that we're going. Hopefully towards the end of this year, if not first thing January of 21.
So what is it about this particular debt that you guys chose that you say now you kind of maybe wish you would have done it a little bit differently?
Yeah, I mean, the floor is kind of high, and being a newer sponsor, I'm working on another deal we're closing in April right now, and it's a very similar program. It's not the same lender, but it's a bridge loan, and usually how the bridge lenders underwrite is they really value the sponsorship. So we weren't getting the best rates at the time when we bought our first deal. The floor rate is 6.5. So yes, it is higher. And now we're doing a loan. I think the floor is like 4.5 or so. And that's a bridge loan, the same sort of structure. So much more favorable. If I went traditional financing, we definitely, at least now with the market going a little bit crazy, we probably could have gotten maybe 100 basis point discount. I could still change the loan at any time, but it really depends on sponsorship. So we were, a newer sponsor, and they took the risk, and fortunately it's been paying off for them and for us and our investors. So we're going to be able to get much better financing. We already are in the future.
Yeah. And for those of you who are listening, kind of wondering what he's talking about as far as this floor is concerned, typically bridge loans are a floating rate, and it's usually a certain number of points above LIBOR, or or a certain number of basis points above LIBOR. And LIBOR right now is trending down, and so typically the actual lender will ask for a negotiated like floor, because normally we also talked about getting a rate cap for the ceiling, right? It's like the rate can only go a certain amount high. But with the current rate environment, the lenders are negotiating and setting in a lot of these floors. And depending on the lender, you can get floors that are sub 2. But in your situation, it sounded like it was like right above probably like a 3 or so, or was the basis points higher?
The spread on LIBOR, I think it was a little over. It's like 325.
Yeah.
Over time. Yeah.
So, I mean, 6.5 definitely is on the high side from what I'm seeing right now as far as bridge loans are concerned. But being able to refinance that in the current rate environment will be, great for cash flows for your property as well, moving into the future.
Absolutely. Yep.
Yeah. So you did 80% loan to cost, and how much are you actually planning on for renovations?
Yeah, I mean, we spent 20% of our renovation budget so far. I think we're going to be under budget. And we're moving some stuff around in our budget that we want to make sure we still implement, but some things that weren't really necessary. Like, for example, we had storage bins, like storage garages, and one of the roofs are pretty old on that, but it's just storage. It's just garage storage. So as long as insurance doesn't make us replace the roof, we can allocate some dollars towards, we actually it looks like we're going to get approvals for adding another 4 apartments to more of a change of use situation that we didn't underwrite initially in the deal. We'd rather allocate money towards building 4 units than replacing a roof over a storage garage. So, we're probably going to end up using all of it, but it's going to be a good thing, just because the way we underwrote it was we were going to use all of it, but we weren't using any of that to build units. So we're under budget on our units, and hopefully we'll be able to increase our NOI by 50,000-60,000 with building an additional 4 units. That'll be completely worth the extra cost.
Sure. So what was the purchase price on this one?
$5.5 million.
So 5.5. And how much was set aside for renovations?
It was $325.
Okay. $325. And that was future funded with the bridge loan, correct?
Yeah, and it's held back right now through the construction. Yep.
Yeah. Okay. And what are you planning on doing from a renovation standpoint? Interiorly first, and we kind of move to exterior as well.
So what we did was, since we closed December, the property needed a lot of exterior work, and believe it or not, I mean, it's winter, and hardscapers and landscapers are looking for work, so you can get better deals. So we started with the exterior, and we're like 70% done with the exterior. So by that, I mean, in the courtyards, there was all ripped old concrete that we completely tore apart and put pavers, really nice pavers, at least in the courtyard areas. We, tore down an old monument sign, and we put some nice, brick posts. It's going to be a brand new PVC sign. He's actually finishing that up today. There's some deferred, like I said, a lot of deferred maintenance with the sidewalks. So we are replacing some sidewalks. We added building signage to each of the buildings. So we named them after like Vail, Colorado for building identification. Like I said, most of it was exterior, and we spent, a little bit on interior work on the units now, just, standard carpet. If it has carpet, we just rip it up and put laminate underneath, and, paint, maybe replace a countertop, maybe put a backsplash in the kitchen. We don't really change the appliances. The market that we're in doesn't really call for high-end appliances, which is great. So it saves us some money. Not much has been spent on bathroom renovations. So we're a little light on our unit, budget for sure. I actually already turned over about 35% of the rent roll. And that's a combination between new deals and renewals. So if we can it looks like we're going to get to all of them by the end of this year. And that's what I was talking to you about, refinancing.
So let's talk about the capital stack a little bit and how you structured the deal with the investors.
Sure. Yeah. So as I mentioned, it was a bridge loan. So, I'm the operator on the GP side, and I have another partner as well. So my partner and I put up, I think it came out to about, of the overall stack, it came out to about like 17%. So I was personally invested. And then we had friends and family. So I had about 13 individuals invest alongside us as well, anywhere from 50 to 100,000. So, and the way we structured it was very simple, like a lot of other, syndicators is you get your preferred return, paid every quarter, which is, in our case, was 8%. And then there was a hurdle, 70-30 split after the 8, and then it was 50-50 after we hit a 15 levered internal rate of return. So we were looking at holding this deal over a 5-year period. We'll see what happens if we're able to refinance everybody's equity out. Our IRRs are going to be pretty crazy, and we'll have flexibility to hold it longer as long as everybody's money's out. So that's how we structured it.
Mm-hmm. Okay. And what was the total equity check?
So I just closed the entry. It was $1,074,000.
$1,074,000. And did you have any issues in the process of raising that capital from your friends and family kind of network?
Take that back. It was $1,474,000. So about $1,500,000. No, to be honest with you, it was a good deal. It still is a good deal. And I had my network, my professional network I went to. My partner had his network that he went to, his professional network from playing. My partner played pro football, so he went to some of his connections there and his friends and family, and we just worked together. So he was able to bring about half of it, and I brought half of it, and it wasn't that bad. And frankly, there's a lot of money out there, especially with the stock market going crazy with what's going on with Russia and Saudi Arabia right now with oil. People don't want to be tied up in the stock market and having no control, whereas with real estate, yes, there are ups and downs, and it could be cyclical, but all my money personally is not in the stock market. It's all in real estate right now. Whether that's a good or bad thing, I'm not freaking out over coronavirus or anything going on in the market. Whereas a lot of my investors are like, all right, when's your next deal? Like, I want to get out of the stock market like as soon as possible. So frankly, no, there wasn't many challenges.
So what other issues can you think of that maybe we haven't touched on yet that maybe came up throughout the entire process of this acquisition?
Any issues in terms of the acquisition? Not much. I mean, big issue was finding out there's a few Section 8 tenants, which we dealt with. No, I mean, we did our due diligence. There wasn't any surprises. There was actually good surprises. I'll give you an example. There's a hospital that leases basically a whole section of our complex from us, and they're paying a below market rate. But the old owner wasn't billing them their heat. There's only one boiler, and you can't really break it up. It's an old building. You can, but it's going to cost you $60,000. It's not worth it. And the owner wasn't billing them their portion of the heat, and it was in their lease. So like good surprises like that, we saved about $500 a month, and that just adds to your NOI. He was overpaying for garbage. He was picking up way too frequently. We saved about $200 a month there. So it was actually good surprises. It wasn't anything crazy that we found. So as long as you do your homework up front, and we try to do as much as we can, you minimize your surprises.
So I have two final questions, or kind of contrasting questions towards the end here. First question I have for you is what did you find that was easier during this entire process that maybe originally you thought was going to be harder?
Raising money.
Yeah. With the current environment, it's pretty easy to get that capital right now.
Well, but this was in 2019. So in that environment, rates weren't as low as what they are now, mm-hmm. and the market went crazy. I mean, the stock market hit its all-time high at that time, so people were feeling good. So whether you're in a down market or an up market, real estate's always there. So I wouldn't necessarily say that, but it is a good point. Yeah.
No, there's definitely a lot of capital out there right now that needs to be placed, and a lot of dry powder. So the last kind of question I have for you here is kind of the opposite of that. What did you find that was harder than expected when you first got into this project that maybe originally you thought was going to be easier?
Um, I guess in terms of, I keep going back to Section 8, just dealing with the paperwork and the office and them not wanting to pay full market rent and me fighting with them and they eventually agreeing to it. It's just, it takes a little bit of a toll on you because you don't know what's going to happen and you kind of freak out. Thankfully, we only have 4 or 5 Section 8 tenants in our entire building. And that number is decreasing every time they come up for a renewal. So that was really the major headache. So.
Mm-hmm. So when you're those Section 8 tenants come up for renewal, are you basically just non-renewing them, or are you able to try to get them up to the market rents, or what's usually your process there?
Should have a whole podcast on it. In New Jersey, it's a 60-day. If you want to increase the rent, it's a 60-day notice. Half of the tenants in the building that were Section 8 were bad, like they destroyed the unit. I went to a couple of them and bought them out. It's very difficult to get Section 8 out, especially for not wanting to pay an increase. So you have to be creative, and basically cancel new HAP. It's called the HAP contract. Try to figure out how to cancel the HAP contract and start a whole new one. Figure out what the payment standard is for the county. Deal with all the paperwork for the office. It is challenging, but we're working through it, and I think it's going to be a lot easier when we have some Section 8 tenants we're inheriting on the next one. And don't get me wrong, Section 8 is a good program on the whole. It does help people, but frankly, a lot of people do abuse it, in my opinion, especially at my properties.
Yeah. Well, Anthony, I want to thank you so much for your time and being here with us today. Can you share with the listeners how they can reach out to you and find more information about you if they want to continue to follow you further or ask some follow-up questions to this interview?
Yeah, Dan, appreciate it. So they can reach me on my website, redknightproperties.com, and that's Red Knight with the K. And we have a LinkedIn page, Red Knight Properties, and a Facebook page, Red Knight Properties. At the bottom of our website, we have an email to my personal email and my partner's email and our office line and a contact us page. So you can reach us through multiple methods.
Awesome. Well, again, thank you so much, Anthony, for coming on and sharing this information about this property, and looking forward to continuing to follow you and as you continue to close more deals, and also have you on a future episode as well.
Great, Dan. Look, I appreciate it.
All right. Thanks so much.